Hello, everyone, and thank you so much for joining today's session. As the title suggests, today we are discussing the art of identifying a profitable trend. I am Kavita Agrawal, the founder of EXP-Invest. Every Monday, Wednesday, and Friday, I bring you live sessions. Since I couldn't come online yesterday, I'm here with you today. Without much delay, let's get started with the session. All right. So, the art of identifying a trend or a profitable trend, what does that basically mean? So, in the art of identifying a trend, what we basically deal with is what time frame are we supposed to look at? When is a trend starting? When is a trend ending? Usually, the ending of a trend is a lot more difficult to deal with. However, when we talk about identifying a trend, it deals more with respect to the starting of the trend. Now, a trend can be identified across different time frames. If you're a long-term investor, then of course the weekly time frame and the monthly time frame is more relevant. Now, what is a time frame and what are these different time frames that I'm mentioning? What do they mean? We'll come to them. We'll come to that in a bit. In the duration of this very presentation, but as a stock trader or as an investor, identifying these trends is very important, especially if you're a long side only trader. Even if you're a long and short trader or investor, I mean, if you're playing shorts, you're obviously a trader only. But irrespective of that, if you're playing both longs and shorts, being able to identify a trend will be your biggest strength in the market, even if you're not very adept in using other oscillators or other indicators. So, if you want to maximize your profits, it is very important to be good at identifying trends. Now, let's talk a little bit about technical analysis. Now, technical analysis is basically a science and an art. Why is it an art? Because there is a certain degree of subjectivity involved, and also the rules change depending upon the kind of underlying asset. Also, the application changes depending on who is applying them or who is using the uh, said principles. Now, why is it a science? It is a science because there are time tested principles which have proven themselves over and over again. There is a lot of literature out there, there's a lot of text out there covering the topic of technical analysis. Since many years, there have been certain concepts like cyclicality and the application of time tested methodologies which have proven that the art and science of technical analysis works and it can be applied consistently in order to make profit over extended periods of time. The whole principle of technical analysis depends upon the study of price and volume patterns, which in this practice is believed to repeat themselves. The whole stock market is nothing but a collection of psychology of all its participants, as a result of which, since humans have a tendency to repeat themselves and humans have been behaving the same way under different circumstances since history has been recorded. Therefore, the premise of technical analysis that history repeats itself enables us to identify patterns and work with them in order to make profits. So, that's a short introduction to the principles. Now, charts. Charts are basically the backbone of technical analysis. They give us a visual representation of price and volume data over time. Now, as the whole practice of technical analysis and chart reading gets more and more refined, there have been number of indicators which have been identified and invented by different market experts. There are new indicators coming up in the market every single day, and some people also prefer to create their own indicators for trading the market with their own vision of what a good trading strategy might be. That is all being made possible by these charts. Now, the charts in the times gone by were drawn by hand by technical analysts. In fact, I know some analysts who are so experienced that they have indeed in the times gone by done technical analysis on hand drawn charts. But today, technology makes things easier by plotting these charts automatically without requiring any additional efforts from our end. Moreover, it enables us to invent and apply different indicators and oscillators, different drawing tools. Sky is the limit to what can be done with them. Now, charts are very important because, like here it's being said, we can gain valuable insights into the psychology of the market participants and make more informed decisions. Now, you might be aware that in the market there are all types of participants, ranging from retail traders to institutional traders, from arbitragers and scalpers to long-term investors. And it is through the combined psychology of these people that and a lot of sentiments which actually determines the direction of the market. And the chart basically gives us uh, a, a visual representation of all these things at the same time. Now, trend identification. So, the whole foundation of the principles, the whole foundation of the field of technical analysis lies in identifying trends. And trends can broadly be categorized in can broadly be put into three categories. One is the uptrends, that is when the prices are rising. Then there is the downtrends, that is the falling prices. And of course, the sideways trends, which is consolidation. Now, let's explore some techniques of identifying trends, right? First and foremost are trend lines. Now, trend lines are drawn by connecting consecutive highs and lows on the charts. A lot of people have different ways of identifying these highs and lows. However, I have been sharing my methodology over the past many sessions, and I always emphasizing using only key high and lows. It's very important to use the most relevant, the most clearly defined highs and lows. Now, because prices are always moving in different trends across different levels, if you're not using important highs and lows, you will end up drawing way too many trend lines at way too many slopes, telling you way too many different things. As a result, you will end up exiting your trades either too early, entering too late, and all sorts of mistakes. So, by drawing trend lines, we get a visual representation of the trend's direction. Now, again, this is why it is very important to start with drawing trend lines using the most prominent highs and lows, which can often be done on the weekly time frames. Now, this representation of the trend's direction can act as support and resistance levels. Of course, trend lines act as very important support resistance levels. They help us identify important target and stop loss levels when we are formulating our trade setups. Upward sloping trend line indicates an upward trend, while downward sloping trend line indicates a downward trend. Now, when a stock is an uptrend and you're trying to take a long position, it pays to wait for a time when the stock comes down to take support at one of these trend lines which you have already drawn. And it's very beneficial to enter at these support zones because they allow you for a very small stop loss level and a bigger target level. See, the whole game of the stock market revolves around your risk reward ratio. Basically, how much risk are you taking in order to potentially earn some reward? There is no guarantee that the target level is going to come, but it's very important that at the onset you're making sure that your setup puts you in a favorable position with respect to the risk reward ratio. Trend lines are a very good tool in doing that. So uh, the first point in identifying, or the first step to identifying good trends to trade is using the trend lines and using them right. The second point is using moving averages. Now you don't need to use a whole bunch of moving averages, but moving averages like 5 period, 20 period, 50 period, 100, 200, maybe up to 500 are sufficient. Now the question is, what time frame should you use? Or what time, on which time frames should you be using these moving averages? There is of course daily time frame which has to be used irrespective of whether you're a intraday trader or medium term trader like me, or a long term investor. In addition to the daily time frames, you can also go for using weekly time frame and monthly time frame if you're a long term investor. If you're a mid term investor, that is a swing trader like I am, then the 75-minute time frame or the hourly time frame and 15-minute time frame is beneficial. If you prefer to trade smaller intervals than that, then of course there is the 1 minute and the 3 minute, the 5 minute, 15-minute time frame available for you. So when the price is above moving average, it indicates an uptrend. However, in moving averages, there are also crossover of moving averages which can be used. For instance, on the 75-minute time frame, a 20 EMA crossover above the 50 EMA crossover above the 50 EMA is a very good indication of a positive trend. Usually in my trading, when a stock has given a strong downtrend, I wait for all the moving averages to adjust themselves in the right order. If I would rather wait for a confirmation, I will wait for the 20, 50 and 100 EMAs to give a crossover above the 200 EMA, and then wait for the price to come back down to the 100 EMA to retest it. I will demonstrate this to you shortly, so stay with me. Next is price patterns. Now, these price patterns such as higher highs and higher lows in an uptrend, which basically form the ascending triangles, or lower lows and lower highs in downtrend, which forms a descending triangle basically, they provide insights into trend continuation or potential reversals. Now, there are many price patterns out there which have been observed, and there's a lot of statistical data available with respect to its viability. But it's very important to remember that price patterns which have been identified by the masses usually tend to lose their effectiveness. For example, head and shoulder is one such pattern, cup and handle is one such pattern. I'm not saying that they've become completely ineffective, but their effectiveness reduces. So this is the reason why for retail investors, I often warn that as a retail investor, it is very impractical to think that you can dedicate enough resources and time to identifying potential trends for yourself. Of course, it helps to have a basic understanding of everything, but until and unless you are dedicated to it, it's always good to associate yourself with a full-time research analyst and depend on their research and analysis for your stock picks rather than trying to do it by yourself. It will be more beneficial for you to just focus on managing your active trades rather than also planning to get into the whole analysis circus, because honestly, analysis and management are two very intense practices, and I, as a full-time trader, can tell you that they're both so demanding that they are equal to two full-time jobs, which is why full-time traders do not have it easy, contrary to what many people think. Because you have to be there in the market when the market is active, even if you're not doing intraday trades, even as a positional swing trader, participating only in cash segments and managing a business where I help other people participate in stock ideas. It takes a lot of work, it takes a lot of time to identify potential participation zones in, different stocks. Now there are more than 5,000 stocks, and even though I participate in only, or rather I have only around 250 stocks in my watch list, it's a lot of work. So it is beneficial for you to be aware of the different price patterns, or if you're curious, there's a lot of knowledge. It's always good to absorb the knowledge, but trying to independently identify these patterns and trade, unless you are a real, unless you're registered with SEBI or have some degree in this field, for example CMT, it might not be a very healthy practice for your time, for your capital. Moving on. Other kind of price pattern. Now, some important categories of price patterns which you should familiarize yourself would be support and resistance levels. Now, we spoke about support and resistance levels briefly when we talked about trend lines some time ago. Now, these support and resistance levels can also be identified depending on vertical and depending on horizontal zones on different time frames, different charts, right? Support represents the price levels where buying pressure is expected to outweigh selling pressure. How do you identify these support zones? Basically, look at the historical charts or historical price action and see what are the levels where price has regularly turned back up after some downside. Basically, these are the points where selling, or rather buying, has kept coming back to the stock, right? So these become support zones. Now, support zones are basically zones which are at current moment below the price of the stock that you're interested in, right? And you have to remember that these support and resistance zones are fungible in nature, which means what we are calling a support zone right now will become a resistance zone once the price goes below that zone. Okay. Resistance, on the other hand, is a price level where selling pressure is expected to outweigh the buying pressure. Basically, the whole idea of support and resistance is very psychological. Now, because prices are determined by people and people have memory, what happens is that people have a tendency to retain price levels in their mind, and this triggers certain biases, for instance the anchoring bias, right? So I might be you might be thinking that I'm digressing, but I'm not. I'm just taking a segue into certain more advanced discussions, because we have a very mixed audience and some of the audience members might be more advanced in their knowledge, so it's very important to give them a insight into these topics. So support and resistance levels are basically formed due to these biases in people. For instance, the anchoring bias, wherein people have a tendency to remember and mentally stay attached to certain prices. For instance, in the stock of Reliance, 2000 is a very important psychological support. It is also a round number, so there again psychology plays a very important role and makes 2000 a very important support level for the stock. 2400 is again another important support cum resistance zone, depending on whether the stock is trading above it or below it, right? So basically, these support zones or resistance zones are nothing but important zones where a lot of buyers and sellers come into a stock or an index, and depending on the side which has more weightage or more participation, that is the side where price tends to turn. So for instance, if there are a lot of buyers, support will be strong and the price will start trending up, or at least it will stop falling down, right? Okay, let's move on. Another type of price patterns, or rather another kind of tool which you need to be very familiar with, are indicators and oscillators. Now there are thousands and thousands of indicators out there, but all these indicators are categorized. Now there are technical indicators and oscillators can provide additional confirmation or signals for identifying trends. Examples include relative strength indicator. Now, relative strength index, the relative strength index is a momentum indicator, which means that it takes into consideration the pace at which price is either going up or down, and it is plotted accordingly, right? It's a momentum indicator, and it is limited to 0 to 100, which means it usually oscillates, it always oscillates between this range. So it's a momentum indicator. Moving average and the MACD, moving average convergence and divergence, is basically an indicator which is based on other indicators, which are moving averages, right? Moving average is a price indicator. It's also called a lagging indicator because it just takes averages of price, and usually depending on, you know, the bigger moving averages you use, the more the lag therein. Now, the stochastic oscillator is another indicator which is a leading indicator. Now, all these different indicators, when combined with tools like trend lines and Fibonacci levels, and there are more tools out there, for instance, these support and resistance zone tracking tools. There are Elliott wave counts. All of these together help you identify and work with the trend, right? Now, they help you gauge the overbought, oversold zones, these indicators, especially the oscillators like RSI, ADX, ATR. All of these, they help you gauge, you know, the overbought, oversold zones, and they help you identify potential trend reversals or continuations. Now, let's take a few examples to understand, and for this I will share my screen and show you the chart of Balkrishna Industries. Now, Balkrishna Industry is in an uptrend right now, and let's just take a look at the charts. So let's start with the weekly time frame, and here you can see that I have drawn a bunch of trend lines. Now, the maiden trend line that I had drawn was this this one, which is right at the top, and then I cloned this one to formulate other trend lines. Now, if you see here near the recent price activity, even though this is a weekly time frame, I mean a time frame which is a lot bigger, we can see that the stock has taken support, or rather taken support near this very last trend line, and it has started to move up. Now, taking a closer look at the daily time frame, the RSI that you see here is telling us something. What is it telling us? It is telling us that there's a phenomena called range shift. And as a technical analyst practicing since last 10 years, I can tell you that there has been a positive range shift. I will not get into the details because honestly the session will just keep going on forever. Yeah, so moving down to the 75-minute time frame, this is what I wanted to show you. You can see I have drawn another trend line with a downward sloping line. Why? Because on this 75-minute time frame, from the price activity that we're seeing, we can see that the price of this stock was in downtrend. However, drawing this trend line here, in addition to the upward sloping trend lines which we drew on the weekly time frame, what it shows, so the broader time frame shows us that the stock was in uptrend. The shorter time frame is showing us that the stock is in downtrend. However, this white trend line that you see is telling us that there has been a breakout above this trend line, and the stock has now come back down to take a support at this trend line. So this technically becomes a good entry point for us, as a result of which we can take a position here and have a stop loss right below the most recent upward sloping trend line, and the target naturally would be the very next trend line right above the price, which would become a potential resistance zone. So talking about this very idea, what we see is that at the current market price of 2250 roughly, the stock is giving us a potential support at the level of around 2200, which means we should have a stop loss with some buffer. So say we'll keep a 20-point buffer of 2180, and we will maintain a target at the trend line right above the price, which would be around 2600, right? So this would be the trade setup, and this trade setup has been formulated by us purely on the basis of the trend, using indicators like moving averages, like relative strength index, and tools like the trend lines. Now let's briefly also talk about the moving average on the stock. So if you remember, when I discussed moving averages, I told you that we are looking for all moving averages to come in the right order. So if you just see here, you see that all the trend lines here came into a kind of a cluster. So basically there was the crossover of 20 EMA, 50 EMA and 100 EMA above the 200 EMA. Now you can see this blue line is the 200 EMA, the green line is the 100 EMA, the yellow is the 50 EMA, and the blue is the 20 EMA, and we can see they are all in the right order. And now taking a look back, when the stock turned up for the first time right here, you see it rallied around 12% and then fell back down 5%. Where did it take support? It took support right at the cluster of this moving averages, or you can simply also say it took support at the 200 moving average right here. After that, it rallied another 11 to 12%, came back down to take support between the 200 and the 100 EMA. And then the stock again rallied a good 16%, and now it has fallen back down around 9 to 10% near the 100 EMA. Now I am expecting the stock to take good support at the 100 and 200 EMA, because basis on multiple observations, we have established that first, the stock is back in uptrend. Second, it has broken above the downtrend which it was experiencing on the 75-minute time frame. If there are other points of confirmation which we can observe. For instance, volume. We can see on the daily time frame that whenever the stock gave a higher closing, the volume was really strong compared to the most recent days, which indicates that the uptrend is really strong. So the stock becomes naturally a good candidate to buy on dips. So this is how you go about collecting evidences in order to sustain your theory about, where is a trend, whether the trend that you've identified is a good trend or not, and coming up with a trade setup to make an effective trade. Now, in any trade, it is very important to know where you will exit in both the scenarios, irrespective of whether the trade goes in your favor or against you. Okay, so that is the trade setup, which basically includes your stop loss and target level. You use the stop loss level when the trade goes against you. That is, you entered the trade thinking the price will go up, but the price goes down. You need to know how much loss are you willing to take in a stock, and that is where that is why you need a stop loss. And how will you determine the stop loss? You will determine it on the basis of the study. Right? If you're not a full-time stock researcher or stock analyst, I will suggest you that even if you are adept in the basics of technical analysis or stock market, I will urge you to associate yourself with a proper research analyst whose studies align with your interests. Let's go over some quotes about the stock market, which will help you put things into some perspective. The trend is your friend until it bends. Now, this is something that I also used in the introduction to this session. Basically, it's very well known that the trend is your friend, but you also have to know until when to stay with the trend. You don't want to get married to a stock in the market. You also don't want to get married to any trend. So basically, stay with the trend until it bends, or rather it starts turning. The quote emphasizes the importance of recognizing when a trend may be changing, signaling a potential exit or reversal point. At the same time, you should stay in a trend not when it starts showing green, but you should stay in a trend until you have compelling evidence that the trend is about to reverse. Now, I also have an analogy for you. Identifying trend is like catching a wave. Now, if you're aware of what sea surfing is, then you might be aware that any surfer before surfers basically study oceans and wind patterns and wave formations to catch the perfect wave. Similarly, we traders study charts and indicators and patterns, sentiments, broad market economics, and macroeconomic trends also, to catch profitable trends in the market. Now, to come to the conclusion, the art of identifying a trend through technical analysis and chart reading is a very powerful tool for stock traders. Even if you're not a full time stock trader, even if you're a full time job worker or business person, the art of identifying a trend can help you make some serious money from the side business of stock trading. By mastering techniques such as trend lines, moving average, price patterns, support resistance levels, and utilizing these indicators and oscillators, we can make informed trading decisions and increase our chances of success. However, let me also tell you how long it takes to even start feeling familiar to these various tools and indicators. So for me, when I started my journey right out of high school, for the first 2 3 years, even though I was studying charts for extended period of times, I was spending more than 6 7 hours a day studying charts, going to college, pursuing courses, pursuing CMT, internship, everything. I was still spending 6 to 7 hours somehow to study charts, and it took me around 2 to 3 years to start making sense. I did a 1 year internship as a technical analyst, and it was only after 6 7 months of intense chart observation that it actually started making sense. Initially, it was really hard. I would fall asleep, because it was so hard and it was so boring. But it got on, and that is why you have to stay consistent, you have to stay persistent. It's great to take a lot of courses, but it's very important to come back to charts and practice, practice, practice. Thank you so much for basically giving me your time and listening in. Now we have some time left in this session, so I will take 10 minutes of your time to, just take a look at the comments that are there. And if you have any stock queries for me, this would be a great time to start adding them to to the chat, so I can help you out in your positions. I will be sharing stop loss targets and what I think about any particular stock that you may have any questions. So give me a minute as I go through your comments. All right, so just a small reminder, if you are interested in connecting with me, I am dropping my Telegram channel in the comments for you. Just click the link and you will be added to my Telegram channel, which is also associated or linked with a active chat group where I multiple times a day take the time out to just respond to requests from the members. So you can connect with me on this Telegram channel, and I'll be more than happy to help you out with your active positions. Just give me a second as I share this, and soon after that, I will help you out with respect to your stock queries. All right. So we have Harish Anand. I hope you're still with us. You have a question about Sun TV. So let's take a look at Sun TV and let me also share my chart with you. All right. Let's go back. Let me move this line, pretty old one. So the trend lines are fine. Okay. And I see the stock has taken very, very splendid support on this trend line, which is very encouraging. 75-minute time frame is showing RSI range shift, but at the same time, the RSI is also showing or indicating towards some exhaustion on the 75 and 15-minute time frame. So Harish, if you're looking for a long-term investment, if you've already invested, great. But if you're looking for fresh investment, I will suggest you to use this range of basically from around 430 to 450 to create your positions. I think Sun TV is giving a pretty good bottom formation and is looking very attractive for long-term investment. Short-term, not so much. I will also suggest you to use the stop loss at around 420. And on this stock, you can comfortably go ahead and use a target of around 550. So around 550 becomes your target and 420 becomes your stop loss, which means you're looking at around 6% stop loss and around 23% target. So I think it could take around 6 months for this target to be achieved, because it's a bit of a slow mover. But that being said, if this target is achieved and crossed, then the second target would be 677 on the stock, because you can see the trend line drawn. So Mahesh ji has a request for RSI range shift. Mahesh ji, I'll be very happy to accommodate this. And next week, on the next Monday session, I will bring to you a session on RSI range shift. Okay, so we have Sajan ji. He is asking for fresh entry in Karur Vyas Bank. Okay, let's see. All right, so fresh entry in Karur Vyas. So Sajan ji, right now Karur Vyas Bank, so you can go ahead and make a fresh entry here. I will suggest you use a stop loss somewhere near the level of 102 and hold the stock for a target at least 116. Now why 116? Because there is a strong resistance there, 115, 116, which is a good 7-8%, and the stop loss that I mentioned to you would be around 3 to 4% lower. Now see, this is not one of the active ideas. Now Sajan Jacob G is actually one of the active members of EXP-Invest. And Sajan ji, you might have noticed that I've not given an active idea in Karur Vyas. The reason is that the risk reward ratio is not very favorable. And I always recommend taking position in setups where your risk reward is at least 3, which means that you should demand that your setup give you a reward of at least 3 units for every unit of risk you assume. Right? And because here the risk reward ratio is not very favorable, I will not recommend you to make a position. Moreover, in banks, the problem is that the broad banking sector is looking a little not very bullish. Okay, I wouldn't say it's looking bearish, but it's not looking very bullish. And there are a lot of other opportunities in the market right now. A lot of better opportunities. So for someone who might be interested in knowing what these opportunities are, I would suggest you join my Telegram channel, and there are links to these vetted stock ideas which you can go ahead and purchase. All right, so we have Samir with us today. Samir, you're asking about Optimus Infra fresh buying. Let me see. Optimus. I hope the spelling is correct. There we go. Optimus Infracom. Okay, so Optimus has given a very strong turnaround recently. Uh, Drawing a trend line on the stock is not easy, but we have a start. And often when it comes to trend lines, if the maiden trend line, if you have confidence that you've drawn a good maiden trend line, then it's a good start. So I will just go ahead and clone this trend line with this slope on the major price points that I can observe without giving any attention to the most recent price action. Now, Samir, if you can see here, the stock took support at a very crucial trend line which we drew basis the price point on 24th August 2021, and since then it has given a strong uptrend with strong volumes. But last 4 days there is also some consolidation, and there are two resistance points here after the strong 50% rally. First, there is a 200-day moving average on the daily time frame, and there is a trend line resistance. That combined with the fact that the stock is into consolidation and the strong volume that we were seeing has now dissipated even on green candles is discouraging, and as a result of that I will not recommend you to make a fresh entry. However, if you are still confident and would like to make a fresh entry, the problem is that I'll have to give you a 10% stop loss, which is a massive stop loss. And the upside, well, there is another trend line at 30, for which we would have to assume that the resistance near 250 will be overcome. So what you can do is instead wait for the stock to give a strong close above the level of 255, and when that happens, then you make a position with a stop loss at the level of 236. But for now, I will request you to please wait and watch. Moving on. Now, Sameer, Sajan ji, Mahesh ji, Harish, if you've liked the response that I've given, if you've liked my analysis, I will request you to please go ahead and give a thumbs up to this live stream and leave a comment appreciating the same. It really helps the content reach more people. And please do join the Telegram channel if you're not a part of it already. Moving on, we have Prabha Karan. She's asking about Reliance Power. So let's take a look at Reliance Power for Prabha ji. Taking a look at the weekly time frame, I don't like the fact that the chart is in a downtrend. Now there are so many stocks out there giving beautiful uptrends, giving beautiful momentum, beautiful studies, and as a result of that I usually don't prefer to participate in a stock like Reliance Power, where you're assuming a lot more risk for relatively lot less returns. However, I will still indulge you. So what I see is that even though there is a downward trending channel, the stock has recently taken support. What is encouraging is the fact that there are lots of strong volume spikes which are being witnessed. That is promising. So if you want to take a position in this stock, let me try to identify. Okay, so on the 75-minute time frame, we can see that there is an intermittent uptrend going on within this downtrend. So usually I don't trust these small intermittent uptrends within downtrends. I prefer not to trade them because the larger trend always trumps, so have to be careful. But if you would insist on making a position in this stock idea here, I will give you a stop loss. Sorry, I was just plugging in my keyboard. It seemed to be running out of power. So maintain a stop loss of around 8.5% and a target of around 24%. So that means you are to maintain a stop loss at the level of 11.9 and a target of 16.2. But I have to tell you that assuming that 16.2 will come is very, very optimistic. And the stop loss, even though it's like a huge 9% stop loss, is still optimistic. Okay. So I will not recommend you making a position in this, but I've anyways given you you know, levels. So that's for you, Prabhaji. Rohit is asking about. So Rohit, welcome back. You want to know about Nippon India? It's trading at 246, but short-term view. Okay, so let's take a look at NAM India, which is Nippon India. Okay. So Nippon India is showing some fantastic turnaround and a strong uptrend. However, you are a bit late for the fresh entry. Okay, but it is promising to observe that the stock has just given, broken out of a consolidation zone. So here, if you want to make a position, I would suggest that you maintain a 2.5% stop loss. So your stop loss would be right below 240, so like 239.9. Maintain a stop loss there. And for the target, again, see, Nippon India is also in an intermittent downtrend, right? Though the broad trend of the stock is bullish, the intermittent trend is bearish, which is discouraging. So if you want to make a long position, you can do it for a target of around 13%. So the risk reward ratio is attractive here. However, you have to remember that there is a very strong resistance coming in from the 200 EMA, and in the past, if you see, this 200 EMA has acted as important resistance multiple times when the stock has tried to move up. So just watch out for the level of 250, and if this 250 level is overcome, then you can hope for a target of 310. So I've told you the stop loss, I've told you the target. Just make sure that you're observing the stop loss if you intend to go forward with it. So Amit ji has just posted a very good comment. He's asking, how do we react in a time when we got bad or good news about a stock, even if the stock is showing good technicals like Adani Enterprises? Okay. So Amit ji, one thing that you have to remember about stocks is that about news is that it's all stale. Okay. So technical charts show you real-time information because technical charts are being plotted real-time based on the decisions which active traders are making, whereas stock news that you see on business channels or business new business websites, even though our journalists are trying their best to bring us information at the earliest, you have to remember that the information is still stale, and there is some big player out there who already knew of that. For example, the Heidenberg report. Even though the Heidenberg report came out and it was a huge surprise to everybody, there were developments on the charts which indicated that there were negative divergences developing, and they were indicative that the trend might take a hit. As a result of that, on my forums to my members, I had started warning against making long positions in Adani stocks, and as soon as the report was released, the same day I advised everybody to immediately exit all their holdings. I posted about the same on Twitter. I also posted the same in my Telegram channels. Now, regarding the question that you've asked about how to react when the stock is showing good technicals, here the response would be to use stop loss. See, this is why we use stop loss, because in the stock market there is no guarantee that the stock is going to stay intact or the trend is going to stay intact. So I'll show you a example to support this. Stovecraft. Now Stovecraft is a wonderful stock, good technicals, good fundamentals, but Today the earnings have come out. Bad news, the earnings were not as expected. Result, the stock has fallen 11 massive percentages. But like I said, the stock is a good one. However, the stock has been in a near term downward trend. Now, if you see, the last time the stock rallied around 52% and fell, this time the stock rallied around 40%. Incidentally, yesterday the stock had taken resistance at the 200-day moving average. And over here, if someone would have, maintained a stop loss at the level, would have maintained a stop loss, well, the stop loss wouldn't have been triggered in this case because the stock gave a massive, downside gap down. But usually a stop loss is your saving grace. However, of course, incidents like this happen. Right now, I am also long on the stock, and a lot of my unrealized profit has been wiped out. So my initial stop loss was around this level, and because the stop loss has been jumped, I've changed my strategy to present time thinking. So what I'm thinking about now is that if I were looking at the stock, knowing that it's showing strong technicals and strong fundamentals, what would I do? The answer is I would accumulate more. So capital allocation is again a very important discipline. So making sure that my capital allocation in this stock does not exceed the stipulated percentage to maintain a healthy allocation and not go overboard, not over allocate in the stock. I have chosen to add more to the stock right now at this price at a lower level, because even though the stock has taken resistance at the 200 EMA on the daily time frame, the stock has also taken support on the 200 EMA on the 75-minute time frame, which makes it a good entry level for me. Taking a look at the 3-minute time frame, I can already see a positive divergence developing. The 15-minute time frame is yet to confirm the positive divergence, though I do see it developing there too. So to sum it up, you have to always make sure that you're using stop losses, and if for some reason your stop loss is violated, it's skipped, not executed, then you have to immediately switch back to present day thinking. Basically, if a stock is given a massive gap down, has that gap down spoiled the chart in a way which suggests that this correction might be continuing? If so, it makes sense to immediately exit the stock and book your losses. If not, and if you have more space to add the allocation without spoiling your principles, then go ahead and add more, but be also sure to use a new stop loss level depending on the present time scenario. So I hope you found that useful. That was a pretty lengthy explanation, but I really hope that helps you understand or answers your query. All right, so with that, unfortunately, I'll have to wrap because I try to limit my sessions to 45 minutes and it's already been 55 minutes, which means I've overshot by quite a bit. I would like to return to the market, and it's just 7 more minutes left to market closing. So I'll just like to take some time to manage my active positions. Thank you so much for joining in today. I will see you again tomorrow in the Let's Get Technical series, where I bring to you practical chart based discussion. Tomorrow again, I will take your stock queries. So if I have not been able to answer your queries, you can either connect with me on my Telegram channel or join back today at 2:30 p.m. and post your queries again, and I will take the time to respond to your queries. So I will see you tomorrow. Thank you so much for joining in again, and namaste.